Just out this morning, the Toronto Regional Real Estate Board with new numbers looking at the housing market and forecasting where the market is going to go through the summer. So far in the report, we're seeing a decline in the number of home sales and prices trending downwards. Our senior business correspondent is Peter Armstrong, and he is here with us to help us understand what's going on right now. So let's look at this again. What are you seeing in these new numbers, and what does it mean for the country's biggest city and its real estate market? Peter?
Yeah, I mean, none of this is going to come as a surprise, Heather. We've been telling people this is going to happen. And in fact, if anything, I feel like the pace at which prices are actually falling remains kind of stubbornly slow. But let's just go through the numbers. That, the average price of a home in 2022 is $1.46 million. That's up. That's up 5.5% from 2021. But, what we're seeing here is that we're beginning to see a drop off in the month-to-month numbers. Now, we're getting into May and June, which is always a really slow time in real estate. You're not seeing a ton of people sell houses during that time. But we've now seen 4 straight months of very slight drop-offs. But as I say, that year over year, we're still seeing pretty significant. I mean, any other place in the world, if you're getting 5.5% returns, you'd be pretty happy with it. Sales volumes are down like 41%, which is, this is what we've been talking about. We knew that as borrowing costs were increased and as pessimism around the state of the economy and where we were headed, we're going to sort of land on the economy. We knew that sales volumes would drop off, that people would say, oh, maybe I shouldn't buy just now. Let's wait and see what happens next month. And if you scale that out over a population level the size of the GTA, you're going to see a pretty significant drop. The question is, to what extent does that kick into the actual prices? Because, Heather, the thing everybody cares about is affordability. And if we're still up 5.5%, as we're seeing 40% drops in prices, that's not really going to do anything for affordability. And even if we saw a 10, 15, or 20% drop in prices, that would take us back to what? The beginning of 2021. So, what we're seeing, I think, is important, and these are interesting data that are helping us flush out the picture. But I think the main question people worry about is, what does this mean for affordability? And frankly, the answer is not much.
Flush it out a little bit, even more so, Peter. How does what's going on in Toronto compare with what's happening in other cities comparable?
Well, I mean, it sort of takes what's been happening in other cities and it bolsters it, right? Like this follows that same pattern. We got Vancouver's numbers yesterday, the day before. We're going to get the national numbers, Korea numbers next week. And I think just the sheer volume of the size of Toronto, you're just getting way more information. You're getting way more data. You're able to compile it and look at it. Well, how does this scale out when you're not just dealing with a few houses here and there? You're looking at, thousands and thousands of houses being sold over the course of a month. So it bolsters that national picture that we're seeing the same thing, that we're seeing volumes are falling, not as many houses are selling, but prices are staying relatively high year over year. We're starting to see that same drop off on the month to month comparisons. But again, we're into sort of, a traditionally slow and dry season for real estate. So we'll have to keep an eye on that. Frankly, I'm most interested to see how those national numbers will pan out. And then frankly, Heather, I think I'm going to be waiting to watch to see what really happens in the fall, because that's when real estate activity picks up again. And I think that will be a really crucial moment in the real estate story of this country.
Okay, well, we'll pick this up then for sure. But I'm wondering, the Bank of Canada, Peter, as you well know, been trying to cool inflation, and housing is a part of that by raising interest rates. And a week from today, we will get the latest key lending decision from the central bank. So what is going to happen this week leading up, and what do we expect next Wednesday?
Well, leading up, we have one crucial data point coming out Friday of jobs, and I think we're going to see yet more jobs added, an unemployment rate that goes even lower than the historic low that we're seeing right now. And then, what we expect to see from the Bank of Canada is sort of a 0.5%, 50 basis point hike is kind of baked in. But I think a lot of people are pretty sure or fairly confident, let's say, that it could go as high as a 0.75% interest rate hike. And I think the thing that will swing them is data like these, right? Are we looking at housing prices slowing enough to keep them at 0.5, or do they feel they need to really get those interest rates back up higher? What about the unemployment rate? What about the job market? And we saw two really important reports out this week from the Bank of Canada, the Consumer Survey and the Business Outlook Survey, both of which show some pretty deep pessimism about the state of the economy. And the bank knows that it's got to get inflation under control to get that pessimism back under control. So really fascinating decision coming next week. Whether it's a 0.5 or a 0.75 is, I think, the big question. But another hike is coming.